Yo, what's up, guys? Good morning. As we wake up today, it's Sunday, and let's look for the update on the AUD according to the fundamental picture or clarity. So when you look at this particular currency here, you see these are fundamental tools, and we're looking at the smart money. Down here, we see smart money are getting bearish even before the other week. Here you can see the blue line. These are the smart money are getting bearish. And if our smart money are getting bearish, we know what is coming. The more smart money get bearish, the more we get a strong drop to the downside. And these are the fund managers getting a little bit bullish. You can say now they are getting like they are heading on the wrong side again. And if they are doing so now, our sell becomes even more valid. And look at this. Here, this is a big drop. Smart money getting bearish. You can see here when they were heavily bearish here, and the fund managers were getting more bullish following the trend, and we got that massive drop. You can see even here, smart money getting bearish, large speculators getting more bullish, and the drop happened. And look back, see here, smart money heavily selling, and now the large speculators buying the rallies, and price drops. Look at this, smart money getting more bearish, large speculators buying the rally because they buy the trend, and we got that massive drop. We can go back and look at this data again. Look at this, smart money selling, fund managers buying, and that was a drop. You can even look back, look at this. Here, smart money selling, fund managers buying, and you can see that this was a drop, but it was not big, like 1 week only, and then smart money, you can see they went up and price went up. So we can look at where here. Smart money is selling, everybody else buying, and a massive drops comes in. And unfortunately, if there's a case study on this setup again, guys, that makes this market even more special, is that I want you to see something here. I want you to see this, the midline, it's called the zero line that measures strength and weakness. Now, when you look at this, smart money, they have crossed from the bullish side and they're on the bearish side on this strong low here. But everybody else, the retailers, they have gone all bullish and they're extremely bullish here. So the last time smart money were ever below the zero line, let me now give you a case study in this particular asset. I mean, it might not sound as you want it to sound, but once you get to master this skill, guys, you're going to see how things works. Now, look at this. The moment smart money goes below the, like we cross the zero line here, it means that we are getting more bearish, and you can see this is what is happening here. Of course, the trend has not dropped yet, but it's gonna happen. We don't know when. The last time you see, look at this. The last time smart money were below that dotted line you see there, when they were below there, you can see the type of drop you got. Now, look at this. Here, again, we dropped below the zero line. There, you can see that was a very nice drop. And the last time we were ever below like that was here, this back on 2021. And so smart money staying below the zero line. Let me zoom it out. Below the zero line here, and everybody else bullish. And look at the type of drop you ever got. A massive drop. And look at this again. So the drop is going to happen here. So that's what we see, guys, on our tools. Now, if now we bring in what we call the index, all right? We look at the strength. We measure strength. Oh, sorry. I need to get rid of something here. We need to get rid of something here. What can I remove? Okay, there. So we add in our other tool that measures strength and weakness. And in this case, these are now the retailers only. But now we're just going to look at it long term, save on time and look at it long term, which that's like 3 years. look back, because smart money are hedgers. And guys, you can see here, and let's bring in the other tool here. Now we match them up. You can see smart money getting more bearish, and on the index they're on the lower side. But here you can see retailers a little bit kind of changed their position. They were 100%, now they're at 94%, which is good. And here again, look at this. We're below that small dotted line, and that was the massive drop you got here when the smart money were bearish on the index, and here on the report we got that massive drop. And the last time this ever happened, you can see again here, smart money getting more bearish, extremely bearish, retailers on the bullish side, the large speculators trying to go long because they follow the trend, and price went lower. So guys, our setup is still valid. Now let's go to the second step, which we call the seasonality. Seasonal focus. When it comes to seasonal focus, I say there's two ways we can look at it. So I'm going to show you the other way. So let's go to Google this time. I'm going to use Google, and we're going to check seasonality tendency. Seasonality tendency. Here, very quick, see if our seasonal focus is still in place. Rate has changed. This video I want it to be as short as it could be, as short as possible. So go to the AUD, Australian dollar. Where is it? Australian dollar. See here. Now, we are here on this Australian dollar, and you can see we look using different years, and you can see start by 2 years. Yeah, focus 2 years. It shows you that we have already dropped, and like we should get a small rally to the upside. The 2 years focus is not that clear. It's not aligning with our smart money, but look at the smart money. This shows you that the top has to be there. And you look at the 10 years, which is always the best. We should go lower until 10 years focus. We go lower until end of May. You see, end of May. This is what we get that clear picture. And you see, if you have to drop, then we expect the dollar to push higher. Let's check on the dollar, and I like 10 years, 15 years, and 20. But on the dollar, I'm just going to go like 10 years is enough to give me a clear focus. And you see, if I check 10 years seasonality, we have to start pushing higher. That's the picture we get there. Now, if I go to AUD, USD as a pair itself on the Forex market, let's go here and look at another picture of AUD, USD here. And on this one, we just need also to check at least 10 years, 15 and 20. You see, if we check on AUD, USD focus, 10 years cycle, we need to get lower like that. Now, if we look at 15 years, look at that. We need to go down. And we are going down until end of May, the last week of May, actually. And we get the rally. Now, look at this. And guys, market's not about politics. Look at what the smart men are doing. Look at this. The focus is still there. We need to go lower. So guys, I can say our sales is still valid on the AUD, and our supplies remains constant. So put in a position, go back to our technical view here, and this becomes your supply, weekly supply here, which then later on we take it into a daily time frame, because everything is still intact, everything is still in place. This is our technical supply, because the wider version, if I mark like the wider version of this, you see, come here, you see, like if I'm going to mark the wider version of a supply, the way I should mark my levels, rally base drop, institutional zones, you see it's already tested, so you have to keep it fresh, and we go back to the basin, and this is the time we say rally base drop on the preferred version, and that is our zone, and you can see still fresh. So if that zone is looking like that, and you see price, market is in it, as you can see, guys, market is in it, and look at this. look at the value, and this time we're going to look at what we call long-term valuation. Long-term valuation. So probably at least 24 days, if I'm not wrong, around 24 days. And I just want to focus so much on the dollar itself, not other assets, because the dollar is more effective. The dollar is more effective on the currencies because it acts as a basket. And look at this. We are getting overvalued. This means that on the international market scale, the dollar is too expensive now and it's likely to crash. You can see there, you can see the last time it was overvalued, price took some time, went lower, it was overvalued, price went lower. See here it was overvalued, price dropped. Look back, where was it overvalued again? You can see here overvalued, you get the crash, overvalued here, you get the drop. And let me just not rush. Let me give you a case study because you might be, you want to see it. And guys, you can pause this video and go through it again. We're overvalued here, waiting for the sell to happen. We were overvalued here. The price took some time. We went lower. We were overvalued here on long term, right? Price dropped, as you can see there. Price dropped. Now here overvalued price, you can see red candles there, even if it's 1 or 2, that's a good move. Look at that, a drop. Where were we overvalued again? We were overvalued here, all right? The drop was there, overvalued here, drop was there. Now, where else were we overvalued? We were overvalued here, the drop is there, and look at this. We are just almost overvalued, and price gave you a drop, a massive drop. Look at this, overvalued, a drop, overvalued, a drop. Can go back and review this. Look at this. We got overvalued here, right? Overvalued. Look at that. We get overvalued, a massive drop to the downside. Overvalued, get a drop. So guys, we can backtest this one until next year. And look at this, overvalued, get overvalued, and we get the massive crash of all time. Here, we're getting overvalued. Look at this, we're just getting overvalued. This means that here, it depends on the number of days, the period. For example, let me change the period so that you can see what I mean. Probably I'm long term on this one. Let me go back maybe 15 days. Let's go back 15 days. You see, does it change? Okay, it's loading. You see here, you can see on 15 days, we get overvalued and we get that crash to the downside. And you see this one changes. So you have to look at different periods to understand, oh, what happened when we were overvalued 15 days, 21 days, like this one is 24 days. So you see when I put on 24, this one is not, but here it is. So knowing how you play around with these settings and understanding the value of assets in different times, it becomes high probability. So you can see here, you could be wondering, why did it drop here and it's not overvalued? It's too close. Guys, it's simple. Look at the period. Look at, okay, it was overvalued on what period? For example, you can put a line here. Let's say here it dropped. What was the value here? We need to understand, was it overvalued in 10 days, 15 days, 20 days? Let's do this and we check it out and we start, okay, because if I go long term, it's not overvalued, then I'm going to check short term, 20 days, what happened? On 20 days, it wasn't overvalued. Go to 15 days. Yeah, you see, 15 days, it's not. Go to 12, 10 days, let's say 5 days, it's not. So what does that mean? Let's go long term. You see, on 5 days, it was almost overvalued, but not here. So here it's not showing us. So let's go long term. Let's go long term. Okay. Now you see, if I go on 14 days, sorry, if I go to here, can you see this? 14 days. It's overvalued and it drops. So knowing how you play around with the settings, as long as the market's into your areas of interest, then it becomes very good. So you can see the might keep going higher. The value of this particular asset keep changing. And if I go to 20, it goes away. I go to like 24, it goes away. I go to 26, it goes away. I go to 27, goes away. I go 28, 29, and 30. And you see on 30, it is not. So this means that knowing how you play around with these settings, first you have to look at your COT report, understand the clarity of your fundamental pictures. Then look for your zone, the supply, the demand. Then look at the seasonal focus. When everything's aligning, now play with the period of valuation. Then to see where is it overvalued. Then that's the time you do it. You sell. Look at this. Overvalued here. And a big, massive drop. Today I'm just using the 24 days valuation. So here it was overvalued. We got the drop. Overvalued here. We get a drop. Here we were overvalued. We get a drop. Overvalued here. Overvalued here. We get a drop. Overvalued here. There's another drop, guys. I can go back in history to all time. Look back, and guys, we can go back and back and back. You can see this is when this is 2021 overvalued and a massive historical drop. So I think I've backtested enough, guys. I've gone back in history. I've looked into a lot of things, and I'm using the same period, 24 days, overvalued a drop, overvalued a drop, overvalued a drop, overvalued here a drop, overvalued here a drop, overvalued another drop, overvalued another drop, and overvalued here. You have seen changing the number of days, a drop, overvalued, a drop, massive historical drop, overvalued a drop, overvalued a drop. And guys, I don't know how you see this, but I'm a little bit excited. Overvalued a drop, overvalued a drop, overvalued another drop. We get overvalued another drop. And not even, you see this one, we're just coming from overvaluation there. A little bit push, a little bit higher, and a drop. And look at this, overvalued a drop, overvalued another drop. And even you can see on this one here, overvalued and a massive drop. Even here, you can see some red candles overvalued. Let me just put in something there, overvalued. There's that drop there, overvalued here. And you see a drop there. And overvalued here, drop, overvalued here, drop, overvalued here, a drop, overvalued here, a drop. And this, we're just coming from overvaluation. This one here, price drops again. And look again here, we are overvalued. So guys, the drop is going to come in. So you just need to be patient. So if that's what we have, that's our zone, our supply. This one is like an institutional level. So we can't use 10 pips, 5 pips top loss. So my trade is here. I'm still on the trade and everything is in the place, but don't bet like your capital, your entire capital on this trade. So we are here, we have this short-term opposing demand here, but I'm actually targeting these lows, which is the weekly. We got weekly demand here. So this is like I'm targeting around 4R, and let's see what happens. At least we will look at it technically. All right, technically. We swept the previous high, the previous high of that candle. When you go back to smart money, used to call it liquidity. We felt close. I'll just say we felt close above that candle. So we closed below it. And that's a good sign of the supply absorbing pressure of buyers. And they're looking forward for a drop to the downside. So guys, have a nice week. This was just an update. If there's another trade I'm going to do, I'll make sure that I let you know. Otherwise, enjoy your weekend. Be patient. Follow your process. Trust the process. And always use risk management in your trades.